Hello everyone, you are welcome back to my YouTube channel. How are you doing today? I hope everything is fine with you. I hope you are doing well, and I hope um, you are also profitable by the contents that you are studying on my YouTube channel. All right. Okay. All right. This is a video that I'm making for you today, right? Or this in this tutorial. All right. I really want to teach you on how you can apply my rules to trade Bitcoin, cryptocurrencies, or any other financial asset. All right. I've received so many questions on from students uh, that can they use my method, can they use my rules to trade volatility pairs, can they use it to trade indexes or maybe cryptocurrencies. And my answer has always been yes, that you can use my rules, my trading style to trade any financial asset of your choice, right? And this is why I'm making this video, because of the trade I was taking on Bitcoin. So I want to show you the rules I followed and how you can actually be a partaker of it, so that you can also trade in this manner. So this is the reason why I'm showing you this. All right, just like the previous videos I've made, you really want to get more value on this or much more information, you can look at the past 5 videos I've actually made. All right, they are really talking about how to make use of a good OB. Right now, the first one I'm actually going to show you is not a good OB. I want to show you on these 3 major rules, right? 3 major rules, right, that I use in trading any financial asset. So rule number 1 says that I'm going to get directional bias or higher time frame IOF. Rule number 2 says that get a rejection zone that fulfills all the rules of another block. And what is this rules of another block? This is what I've actually written for you here. So it must take out liquidity or accumulate before the block is formed. Number 2 says that reject on a pseudo block or another OB. Number 3 says that it engulf or have an imbalance in it. And number 4 says that it must have an impulsive move that break market structure. So these are the rules I actually followed when I want to spot a very good OB to trade from. So the last rules, based on the 3 basic rules to trade, state that you should drop to lower time frame to get a suitable entry. So these are the rules that we're going to apply to this particular trading style here. Now, if you really want to get the flashcard of this, I've already made this available on my Telegram, on my Instagram page. So you can actually look at my Instagram page to get how I have followed all these particular rules and actually get the full chart on it. Okay, so before we start, let's quickly follow the rules. And the first thing you can see here is that you would have seen that this particular structure has already been labeled. As you can see, this is an higher high, this is an higher low. This is where the market is coming from. The market made a lower high. Now this lower high was confirmed because market eventually created a lower low. As you can see it here, market created a lower low. So from this lower low, right, we have another lower high here, then a lower low. So we can be rest assured that market structure is now bearish. But anyway, this is where I got my rules from. So after getting directional bias, I've already established the fact that market is bearish. So basically, this was when I got to the market, where the market is creating this kind of a rule, right? This was when I saw this particular setup here. I can actually see something like this in this area. So I began to actually look for a good OB for me to trade from. So, rule number 1 has been met based on the 3 basic rules to trade. Rule number 2, I want to get a good OB. So the first thing I'm going to spot is that, okay, I can see an accumulation here. This particular stuff is accumulating in here. Then this particular candle that I'm going to mark as my bias, I'm going to mark this as my bias candle. Right, this particular candle as my bias actually took out liquidity. I'm going to consider this as a liquidity grab, just like a trend line, a mini inside liquidity structure. Right, so I'm going to mark that as liquidity. So the rule number 1 has been met as what you can see here. Rule number 2, it must reject on a pseudo, right? Just like what I used to say, pseudo is not a strange name that you are going to be asking for what is the meaning or things like that. It just means another order block, but this order block must not necessarily fulfill all the rules that I've actually stated here. That is what I'm looking out for. That's why I call it pseudo, right? Because it doesn't fulfill all the rules I'm actually looking out for. And as you can see, this particular block doesn't fulfill all the rules I'm going to be looking out for on this particular block here. Now, if you don't understand what another block is, right, you can actually search my YouTube channel and you're going to see how to trade another block, how to spot another block, and how to trade from it, right? All these particular concepts are very, very important if you really want to mark if you really want to be successful in getting these rules I'm actually giving to you. So that's rule number one. Rule number two rather has been met, and rule number three, it must engulf, your candlestick pattern. You should actually know that. So your candlestick pattern, we have engulfing candle, we have a doji and things like that. So in this one, this is an engulfing candle, as you can see, bearish engulfing candle, as you can see that. So but basically the smart money traders, we call it, maybe it has an imbalance, or as we will call it in our group, it has a fair value gap in it. So this particular candle has a fair value gap in it. And the last rule, which is rule number 4, says that it must have an impulsive move that breaks structure. As you can see, this is a strong move, right, that break market structure, right? Went up to actually break this lower low in here, broke this lower low. So we can consider this as a break of market structure, the external structure here. I'm going to title that as an external structure, as what you can see here. So I'm expecting price to retrace back into this before we now drop to my lower time frame, which is the rule number 3 of the 3 basic rules to get a suitable entry. Right. So you can actually form your trading plan, as many people that are also asking me concerning trading plan. You can really get draft your trading plan from this. And just like what I used to tell you, your target will just be you targeting 1 to 10, 1 to 20, 1 to 5, as your psychology can actually permit you to do that. Then at the same time, I will not advise you to risk more than 1%. All right, but basically I trade 0.25% of my account, or I can also trade 0.5 depending on how the setup actually looks like. All right, so with this, I'm expecting price to retrace back into this before I will go to lower time frame to catch my entry. So the first thing, I have to go back a bit because I want to drop to lower time frame. Then I can also see something like a divergence. I don't really have a name to this particular pattern in the market, so anytime I see this, I always mark it like that, because I always look out for something like this. Basically, I want price to actually come back to come and take this particular section out. So let's drop to 15 minutes time frame. So in our 15 minutes time frame, I want price to give me my lower time frame patterns, right? So the first thing I can see, price gave us a liquidity gap in here. All right, this is actually the first liquidity graph. So we're looking for our price we're actually going to give us an entry from this. So let's go on. So definitely we want this particular structure to be broken, right? This particular structure to be broken here before we can actually begin to trade. That's really what I want to see. I want this particular zone to be broken, then before I will be looking for a lower time frame structure to trade from. So let's see what really happened, right? And that zone was broken. After that zone was broken, so I can actually look out for this particular zone for me to trade from as my lower time frame entry. Why? Because this particular block also reject on a block here, so I can begin to look for a lower time frame entry here. I'll put my pending order here so that when price actually come back there, I can actually be triggered in, then my trade will continue to go down. That's really what I want. But anyway, I'm just showing you this. I did not pick this kind of an entry. I'm going to show you another one that I actually pick an entry from. But let's see. So this particular trade was triggered, as you can see. It was triggered here. All right, this is actually going to be our stop loss. It was triggered. Then let's see how many pips is going to give us. Then before you know it, it was stopped out. But this eventually still gave us some profit, about 1 to 3 risk reward ratio. So as many of you that are just looking for 1 to 5, maybe you would have actually taken partials here before this particular one actually gave us something like this. So this is actually the first thing that we can see. So let's see another thing that we actually going to happen, because that particular trade has been invalidated. So we have another one here. Another liquidity graph actually took place. But don't forget, we actually want price to actually be broken. We want market structure to be broken. So I want this particular area to be broken before I will change my direction on the lower time frame. But let's see what happened. Right, let's see what happened. Actually, this particular zone would have been considered as a breaker, right? Some people would call this, I also call that breaker block, right? Because it was the last order block that caused this particular zone to be broken. So this particular zone to be taken out, which is actually a liquidity graph, so which might imply that we might actually be looking for lower time frame entry here. But I will not do that anyway, because I just want a correct change of market structure before I will continue to trade. And this particular trade, the stop loss might really be too wide. Anyway, this is cryptocurrency, so we can actually follow in that pattern. So if we want to take an entry like this, you can actually go on to follow that pattern. But I want this particular area to be broken before I will begin to look for lower time frame entry. But let's see what will happen if price will eventually get back to that particular extreme zone, and if not, then we'll move on. So let's see. Wow. And that trade was triggered in. As you can see, it was triggered in. But anyway, I would not have actually picked my entry from here. I'm actually going to look for how this particular zone will be broken before I am going to call it a trade. All right. And if not that, this particular zone again, because this actually now is now looking at as a major structure for me. All right. This is now looking at that as a structure for me here. And as I can see that was actually broken. Right. So definitely, let me try to replay it back, which was the zone I actually picked my entry from, but that was not the exact zone. Anyway, I'm going to show you what I mean by that. Right. So definitely this particular zone is also fulfilling my rules. This kind of an OB, and this OB is also rejecting on it in here. So with this, I want this particular zone to be broken, and when that zone is broken, so I can set my pending order here. Right. I actually want it to be maybe 50% of this zone. Anyway, I'm going to use this part of the O block. I'm trading Bitcoin. It's not a currency pair, so my stop loss will be, this is going to be my entry, right? And my stop loss will be above this eye, a little bit above this eye. That's what I want to use as my entry. So let's go on to see. Actually, that was where I picked my trade, but that was not exactly when, that was not when I got to the market before I picked that zone. I'm going to show you exactly when I got to the market. Now, this particular trade has already been triggered in here, but that was not when I got to the market to pick that trade. Anyway, let's continue. I'm still going to drag this. I did not take this trade. I will just mark this like this, but you can take a trade like this. But basically what I want to show you is how I pick my own trade. So definitely another individual might actually be looking at this particular zone as a good trade, as you can see, as a good zone to take a trade. But I will not take a trade here. Why? Because if you drag the Fibonacci from this previous swing high to the current swing low, I want to sell at the I want to sell above the 50% range. And this is the 50% range. So this is below the 50% range, which is not really advisable for you to do that. Most of the time, this particular zone will actually be taken out because it will just serve as a liquidity zone, right? This eye will serve as a liquidity zone for price to come back into a range that is in the 50%, or even at this particular extreme zone that we have here. Let me delete this so that you can actually have that. For price to come into this particular zone, because this actually forms the 50%, or into this extreme zone, that is what we can actually expect in the market anytime you want to trade. So let's see. Now we can see how price I eventually took it out. Can you see? Now I also want this particular eye to be taken out before I am going to trade. So definitely my entry is going to be above this eye. So let's see what that would be. Then I'm going to show you where my target will be. Right. As you can see that, then this trade actually got us triggered in. So this was actually what I got in the market. This is what I saw. And I marked this particular zone. So this trade was triggered in. Then our target will be on the 4-hour time frame. On the daily time frame, I want to see a swing zone. I'm still going to explain what I'm actually looking out for in the market anyway. I'm going to explain that. So my target will be here. So I'm going to label this as my target. That's actually what I'm looking out for. So let's go back to the 4-hour time frame. All right. So I have to allow this to play out up to that particular range. It was actually about 1 to 40 risk reward ratio. Okay. So let's play it out to see 4-hour time frame. You can see price just triggered us in. Then after that, price just began to drop. Then actually gave us our 1 to 40. It was actually a 1 to 40 risk reward ratio trade. Right, actually got from there. And as you can see, this is how you can follow all the rules. You can see all the rules were met. And this is what we call the rule-based trading, right? You are not just cherry-picking your trades. You are not second-guessing. You are not doing whatever things. You are just following all your rules and all your rules alone. This is how to be consistent, this is how to be profitable, and this is how to actually get things right. So we're going to apply the same rules to see our predictions on Bitcoin, right? We really want to see how Bitcoin will be, right? Basically, just like what I used to tell students, right? I'm not really a trader like that on Bitcoin. I mostly invest on Bitcoin, right? Just like what I've actually been telling people that have been asking me. The first time I invested on Bitcoin was in 2016, and that was when the price was about $1,000 or so, $1,000 plus or so. In Nigerian currency, that was about 300,000 naira. That was when I invested in it, right? I actually invested much more in it, and Ethereum, Litecoin, and some other major cryptocurrency, and some of them have actually done 1,000%, some of them have done 200%, some of them they're actually shitcoin that at the end of the day I actually lose everything on it. They are not even tradable again, and things like that. I just consider them as an investment, so it is something that I have to really gain and also lose from. So that's just the point. But basically, anytime I see my pattern being played out on the chart and I see that this actually looks very good, I'm actually going to be a trader, right? I have some percentage of my money I've actually put aside just to really trade it. I lose and I also make money from it. So basically, my predictions on Bitcoin will actually be in this manner, right? All this particular stuff also fulfill all my rules. Number one, we want to get the rules, the three basic rules, and if you can check the daily time frame, basically you will see that this market is surely bullish. As you can see, directional bias is bullish. That's one thing you should know. Then number two, I want to get my good OB. From my good OB, all these rules must be met. So the first one is that this candle engulfed, reject on a pseudo, as an impossible move that breaks market structure, and it actually take out liquidity. This is actually going to be a liquidity graph. Takes out liquidity before rejecting on the pseudo. So all these particular rules were met. So I'm expecting price to come back, take out this liquidity. This particular zone will serve as a liquidity zone to be rejected on this particular zone. Then I want to see it going higher. Then my target will be about $72,000 or maybe $70,000. That is where I will be expecting my targets to be. Then anyway, if this particular structure also give me another lower time, another structure on it, maybe on 4-hour time frame, right? Really, I will be looking for selling. Looking to sell this particular pair. Then my target will be this equal low. This equal low here, that's going to be my target if I'm going to see any strong patterns again on Bitcoin, right? I'm going to be selling that and I'll be targeting this. And as many of you that really want to trade Bitcoin, I'm not an intraday trader on Bitcoin. I'm much of a swing trader on Bitcoin, but I really want to trade it because I love using the higher time frame to just look for the opportunities and not the lower time frame. I hope you've gained value from this, and if you have gained value, please kindly click on the like button, like this video, so that it will help the YouTube algorithm to recommend this particular video to as many traders as possible. At the same time, if you are yet to join our mentorship page and you actually you wish to really participate in what we are doing in our private group, so you can also send me a message on Instagram or on my email or even on Telegram for you to join immediately. Our class is $550 for a simple class at Mentorship Pro. Then we have Mentorship Premium, which is actually about $2,500. So why is it $2,500? Why is it that much? It's because the classes are actually one-to-one sections, right? They are one-to-one sections, and we're going to be having the one-to-one sections till you are actually profitable or you actually wish to really stop from there. So this is really what you can participate in and what will actually give you more edge in the market, right? And just like what I have in plan, right, is to give you a massive discount this month. So the information will be out sometimes around this week, so that you can, if you really wish, right, you can actually participate. But this kind of discount will never happen again because it has never happened before. This is just the first time I'm going to give that kind of discount. Then it might not really happen again. It's just to bring in many people that doesn't add that much into the group, whereby I will be giving you some on the high discount level, so that you can also be a participant in this market. I hope you've gained much, right? So if you are here to follow us on all our social media platforms, you can do that. And if you are here to subscribe to this YouTube channel, please kindly subscribe. And that shows if you're a new viewer, right, you can subscribe to this YouTube channel so that as many times as possible that I'm going to upload new video, you can have access to them immediately. All right, thank you for joining in. I will see you in the next class. Until then, have a blessed